Trading concept. We will start talking about volatility, where volatility comes from, how volatility works, why volatility clusters, what volatility is. Just making sure you are seeing me. Perfetto, ottimo. Volatility, trading concepts. Volatility is not working. Just a second, guys. Why is not working the sharing screen? Okay, perfect. It's working. Just making sure we are live. The good part of being live is that we have to making sure everything is working. So we need few checks every time. Perfect. You are seeing Discord or you are seeing the mental maps, miro.com. Just a few seconds. You are seeing Discord. Why you are seeing Discord? If I'm sharing, just 1 second. Now you see, guys. I hope so. 3, 2, 1. Let's go. Perfect. Ottimo. Thank you, guys. Sorry, we lost 3 minutes, but we're gonna recover this time. So, again, just one more time, the principal topic of the masterclass tonight. We're gonna talk about volatility, trading concept, how volatility can be the key of the success of your trading career. We're gonna talk about building wealth. We're gonna talk about survival strategy, not just winning strategy. I think one of the most important things in trading is not just winning, is surviving, being alive, don't lose money, don't let money on the table. That's the most important thing that a lot of people completely forget when they approach to this kind of markets. So tonight, of course, we are gonna focus on Forex market, crypto market, and all this part of short-term strategies. We are not going to focus into long-term and investing strategy as a stock portfolio constructed for having a long-term objective. So we are going to, of course, talk about volatility in the short term and how to build wealth in the short term, day trading. So we are not talking about picking few stocks and holding them for few years. It's not gonna give us an edge talking about the mid-term and long-term. Let's talk about short-term. Let's talk about the opportunity that we have in ATS as well, in the prop firm industry, by day trading. Day trading can be one of the most interesting, sorry, I just taking off the notification, perfect. Day trading can be one of the best and one of the most important path of your life, because the opportunity that trading, of course we are talking about day trading as I was talking, can give you, it's amazing, but you have to be careful with risk, and we're gonna talk about risk. We're gonna talk about risk, and not just risk, but risk with compounding. We're gonna talk about survival, we're gonna talk about performance, longevity, consistency. We're gonna talk about market psychology as well, risk management concept, drawdown, risk of ruin. We're gonna talk about many things, and we're gonna, of course, just few minutes left of the presentation of the topics that we're gonna cover tonight, and then we start, of course, with the topics. But most important topic of tonight as well is the difference between speculators and retail traders, and I will say newbie traders, like traders with no experience, traders that are in the market just to make some profit, and I don't know what's their goal. What's the goal of people that are in the market just to make some money and then run away? And we're gonna talk, of course, about professional traders and their edge. The edge of the professional trader with professional real trading strategies, and of course effective trading strategy, and how they build this trading strategy and how they build edge. And then we're gonna talk, of course, about volatility and how volatility defines how capital should be used. And final remarks, of course, how wealth actually compounds in volatile market. And then we're gonna talk about many things: stop loss impact, wealth durability contrast, compounding requirements, and unlimited topics that we're gonna cover tonight. So start from volatility. What volatility is? Thank you guys. 7 minutes. And we are starting effectively the lessons of tonight. I hope we're gonna finish in 1 hour 15, 1 hour 30 maximum. I don't want to make you guys so spending a lot of time. It's not time spent, of course, you know, this is time being invested. It's important topic that are being covered tonight. It's really useful topics. So useful, sorry. Not useless. So, volatility. What volatility is? Volatility is the visible pressure. Volatility is not, sorry, the visible pressure in the market is not randomness. Volatility is not randomness. Volatility is not noise. It's imbalance under urgency, as I write there. So, for me, Richard, the last 7-8 years of my career in financial market, volatility 99% of the time is what? New York opening market session, so 8:30 a.m. in New York. Volatility for me, 99% of the time was New York opening session. And I built all the wealth that I built for the last almost a decade by taking advantage of volatility in a smart way, because volatility can be really dangerous if not approached in the right way. So tonight the focus is volatility, building wealth thanks to volatility, but being and pay attention to risk management behind everything and build a correct strategy to taking advantage of these things. So volatility, as we told, is visible pressure in the market. Of course it's visible, because when we see the market pumping and the market dumping, this can be translated as volatility, of course. So it's a visible pressure in the market, no randomness, no noise. Behind every market movements there are important, really important, how can I say, decision that was made before the market is gonna move. So the most important thing, I don't want to talk about conspiracy, I don't want to talk about control stuff or some kind of Illuminati stuff, guys, but let's be honest, somebody controls the market. Somebody controls where the market is gonna go and where the market in the past have been. So the most important thing is that we understand, like Richard Wyckoff used to told us. Richard Wyckoff was one of the best financial analysts 100 years ago. We are talking about a guy that define and read properly some. If you search about Richard Wyckoff, it's not me, Richard. It's Richard Wyckoff, a financial analyst from the last decade. Not the last decade. Sorry, 130, 140 years ago, Richard Wyckoff was alive. And Richard Wyckoff defined the market structure by institutional vision, and he was talking about the most important thing that we have to understand when we operate the market is who is controlling the market. The famous operatore composito, the composite operator. So the most important operator in the market right now, who is this? We cannot even imagine who control the movement of the market, who control the liquidity of the market, who is in charge of making this kind of movement in the market, having already pre-planned. Every movement in the market is planned. What we have to understand is how we take advantage of this movement, high movement, and that's what we're gonna cover tonight. So where volatility comes from? Volatility is created when the participants are forced to act. The main sources, of course, is leverage, high leverage position when the market is too dragged, when the market is too poisoned with leverage. For me, leverage is poison. I'm not a toxic trader, but like for me, leverage should not exist after 1 to 30, 1 to 40. Like leverage until 30, I think it's okay. But then to 30 from 30 till, I don't know, during the COVID and during the 2020, I was seeing some exchange doing leverage till 1,000. Wobi was doing leverage till 1,000. Many crypto exchanges were doing insane levels of leverage. So leverage, high levels of leverage, of course, gonna put the market in a really bad situation, and the market have to clean himself. So what I see about volatility, I will just spend the next 5 minutes to really explain to you what volatility is for me. Volatility for me, as I told you before, is 99% of the time New York market open, Asian open as well. So the session market open, where the biggest stocks exchange in the world open, and of course this trigger a lot of volatility. But volatility, of course, beside this market opening session, volatility is really important that you understand is a moment where the market cleans the bad structure that were being created in the past. So many leverage, okay, there will be a moment where liquidation gonna take control, so volatility take control of the situation and gonna liquidate a lot of market participant that has been using way too much leverage. And that's the most important thing, understand where volatility and how can we understand. Basically, I open Coinank, okay, I'm giving you market insight, very important market insight, even if it's not my interest tonight giving you market insight, but just explaining you tonight many topics. But then I open Coinank, okay, I go, this is the first thing that come in my mind, just trying to explain you the liquidation things. I go on liquidation head map to understand where the market is ready to liquidate most of the participants there are with opening position right now. So I want to understand where the most part of the liquidity is right now. Okay, right now $89,600,000 is the most important level of liquidations in the market. Probably the market's gonna drop till 89,000 to liquidate the biggest part of the participant of the market that are using way too high leverage right now. How can I understand if they are using a lot of leverage? I go to not low leverage, not medium leverage, I go to high leverage and understand where's the money, where are the stop loss, where are the liquidation level of the high leverage traders. So I understand it's 89,000, 90,700. Of course, on the buy side, 92,000. So understanding the levels of liquidity can help us, of course, to understand where the market is probably, because nothing is 100% sure that is going to happen. Of course, guys, let's be clear. No strategy have more than 90% win rate. I will say every strategy have probably 40 to 50% win rate. And that's okay, guys. If you have a strategy that have 30% win rate, you're still winning in the market if you have the correct risk management. So liquidity, volatility, everything combines together. They are not just things and names. Volatility and liquidity, they're not combining together. No, they combine together. It's really important that we understand that the most important moves that the market do are because the market need to clean some areas. The market need to, how can I say in English? The market need to throw away a lot of market participants, throw away many traders, make people lose money. That's how the market works, guys. I don't remember if I wrote you here. Probably I wrote you a really important quote here. Disagreement, why trade exists, why the price is moving upside down, upside up. Why the price is being moving? Because people disagree. Some people are long, some people are short. Demand, offer, create a shock, and of course the price gonna move in a way that who have the control, who have the most important sides, who have the most important position, gonna win. Okay, so I don't want to lose time explaining many things that are not written in the mental map, so you are not going to understand. What volatility is? Okay, where volatility comes from, main sources, we talk about shocks, time pressure, expire, redemption, expire of options. I hope everybody know about options. I hope everybody know about leverage. I hope everybody know about futures and perpetual stuff, of course, and leverage. That's the most important things. And how volatility forms. Simple chains, macroeconomic events, economic news, and liquidity pressure. That's volatility is something that we can predict. Why we can predict volatility? And how can I predict volatility? So understand the exact minute and the time where the market we're gonna move. Guys, simple, investing.com. You go to investing.com, okay, go to check the economic calendar, trying to understand the most important news in the market. When you understand where are in the day, in a specific time of the day, the most important news, you gonna be cover yourself. You're gonna make sure, I hope I'm recording, guys. Yes, I think so. You gotta make sure that you or stay away if you are not ready to embrace volatility, because that's very important. You have to be ready to embrace volatility, and tonight we're gonna understand together how to embrace volatility, how to be ready, okay? Be ready to embrace volatility. Volatility is not for everybody. Volatility is something that need to be really understand. So, as I told, investing.com, you go to economic calendar, you try to understand where are, like today there were a lot of news during 2:30 European time. 2:30 the market moved in a way that was catastrophic for many traders because it caused a lot of liquidations. So, how volatility forms, simple chain we talk about. I think we can try to understand what I'm going to talk with you tonight. So, trading concept, disagreement, why trade exists, different participant value price differently, different time horizon overlap, different contrast force actions. Trading is exploiting disagreement, not predicting truth. And that's very important because we have to understand something that many people avoid. Who trading pays, who the market pay, why I am making money and maybe you guys are not making money. I'm just saying an example. Why some people making money and why some people not. Because the capitals flow from the overexposed traders, the unprofessional traders, the unstructured traders, the overexposed traders, as I was talking before, okay, give money to the structured traders. So who doesn't have a structure in this market gonna lend money to people that are really structured, to people that have risk management, to people that are ready to make money in this market. So market pays trader with structure, not opinions. Market, guys, doesn't give a fuck about opinions. Market doesn't give a, sorry, I don't want to be rude, but that's it. That's the truth. Okay, you have to be ready. So, capitals flow from overexposed trader to structured trader. Structure means defined risk, exit before entry, ability to stay inactive. Many people are not ready to stay inactive. Many people are not ready to leave the markets and come back the day after, leave the market and come back the week after if they are losing money, if they are not respecting their trading plan. So structure means defined risk, ability to stay inactive. Most important thing, trading profit come from surviving other mistakes. And that's where we understand what profitable trading is not wealth. Okay, trading become wealth building when drawdowns are controlled. Okay, you cannot, guys, have Monday 3% drawdown, Tuesday 5% drawdown, every day different drawdown percentage. No, you have to follow a plan. In this month, in January, we will have 6 masterclass together, and we're gonna cover a lot of things. Tonight is most important, it's a really important masterclass, of course, because we are covering things that are really important in my strategy, and I'm going to expose it all. But in the next masterclass, we're gonna talk very closely about risk management. How risk management gonna be the most important key in your, beside volatility, of course, in your strategy. So you cannot think, of course, that I can explain all my trading strategy in just one or two masterclass. We're gonna need 6 masterclass, 7 masterclass, and we are going to have this masterclass, of course. So why trading alone is not enough? Trading become wealth building when drawdowns are controlled, exposure adapts to volatility, and capital compounds. Okay, I'm just looking at Bitcoin because I was trying to very late entry in the market, of course, but I'm in, and I think the market's gonna drop, and there's a good possibility to the market drop till 90,000 right now. But it's very late. I made a very late entry. I was completely out of work today, but I was I mean all day, guys. I don't skip a day. I don't remember the last time in my last 7 years, 8 years that I didn't check the market. Not even one day, not even one session. Of course, Saturday and Sunday is not something that I'm interested in checking, but you have to be on, and you have to pay attention to the market, guys, because more time you give to the market not gonna return in money. The time you give to the market not gonna return you in money, but they return you in experience, in visual experience, in mental experience. And this mental experience, if trained, can give you really lot of money and really lot of wealth. But the market is not gonna give you money because you spend 10 hours watching at the charts. Okay, so let's talk about this. Volatility is not the enemy, because many people, and that's very scary. You know, many people, I don't know which volatility. Let's talk about today. Today, this happened in the market. Okay, this was the NFP data coming out. Okay, volatility, liquidation, maximum of the market being completely liquidated, and a lot of stop loss of many operators being triggered. So many people see this as an enemy. You know, oh, I'm not understanding what is happening. No. Volatility should not be an enemy. Okay, volatility. What does volatility? Volatility destroys the unprepared. Because that's the truth. If you are unprepared, guys, volatility is gonna fuck you. I'm sorry. Volatility, no, you don't see the chart. Okay, I'm sorry. I'm just probably the no, sorry, just 1 second, guys. Okay, 3, 2, 1, go. I hope so. Let's see, guys. If you see the chart, perfect. Okay, so volatility, really interesting things, is something that people treat as an enemy. Okay, if they don't understand the real purpose of volatility, they treat volatility as an enemy. Okay, they don't know what the market is doing, so they treat this as an enemy. And you are your real enemy, guys, not volatility. You are your real enemies, because if you spend many hours studying and understanding what volatility is, you're gonna be friend of volatility and you're gonna use in your favor. Okay, so volatility is not risk. Volatility is not risk. Risk is something that you are taking when you are exposing in the market. Okay, volatility cannot be compared directly to risk. Volatility offers opportunity. Risk arises from exposure without controls. You are taking risk in the market if you are exposed without any control. This is risk. Volatility is opportunity for me. I can understand that the losses come over the rate. It's everything all right. If you are seeing me and listening me, perfect. So we have to understand that the biggest losses come from over leverage, no exit plan, emotional sizing, and all these three structure create excessive borrowing, uncontrolled debt, lack of strategy, inability to adapt at the market conditions, fear driving shows as well, because fear is something that, guys, I cannot lag on it. Okay, a little bit of lag, but I hope everything is smooth. Okay, so guys, don't take over leverage. Don't risk money you cannot lose in the market. It's the most boring quote you're gonna listen in all this week. Don't lose money you are not prepared. Don't invest money you are not prepared to lose. But that's the truth. That's the truth, guys. Professionals have a strategy. Be professional. Have a strategy. Okay. So talk about strategy and we can talk about what the market is doing right now. Okay. The market is collapsing. Why the market is collapsing? We're gonna cover tonight why the market is collapsing. I'm gonna close this position because I pass another evaluation, and I hope everybody can pass a good evaluation, guys, with ATS. Trade with ATS. ATS is a really interesting and nice project. They are starting to doing pretty good around this month. So closing, perfect. Short position closed. 6,000 evaluation passed, and we are in. Coming back to the masterclass tonight, again, we want to work in a professional way. Professional need volatility, more range, more opportunity, more fear, more mispricing, and that's the thing. Increased market movement, potential for higher return. Volatility is good. Volatility is good. I like volatility, guys. I don't blame volatility. Okay, volatility is something that really perfect. You see me, everybody see me, amazing. Okay, if volatility scares you, it means you don't have a system. You have hope. Okay, I hope the market not gonna bounce back. I hope the market. What is this, guys? What is this? What is this? An amazing and very big market movement. Volatility caused to a news of the market. Perfect. I'm gonna put myself in the other way. I'm gonna short the market. Why? Because I have volumetric analysis that are taking care of my strategy. I have a trading plan. I have risk with me. I'm a professional trader. I know what I'm doing. And if I really understand which movements are real and which movements are just a volatility trigger, I will have the market in my hand. Okay, so as I told you, if volatility scares you, it means you don't have a system, you have hope. Okay, and we are gonna cover the importance of having a system. Which system I'm talking about? Why I'm talking about system? Because if you have a system and you don't follow this system, you should be worried about your career. Okay, if you have a system and you have to have, and you don't follow this system, you are failing. And when you understand you are failing, then maybe you start doing something right again. So put yourself in pressure, because good quotation, no? Diamonds are made under pressure, but that's the truth. That's the truth, guys. If you put in pressure and you put it in a way that you must understand the market, and you must understand what's happening in the market and all the composition of the market, traders, volatility, sessions, more things you understand, more results you're gonna have in this market. Okay, so wealth is built by surviving, not by winning big. If you ask me, guys, if I like more sessions of making tons of money, or session where I make few mistakes, not by choosing, but by normal condition, you know, and the market is dropping, market is dropping very fast. Why market is dropping very fast? If you want, amazing. Market is dropping by 1,500 points, but it's okay. I don't want to spend a lot of time just covering market things. It's not our goal tonight, but of course we are traders. We want to look at what market is doing right now. But I was told, if you ask me if I like more trading sessions where I really make great profit, or I like more trading session where I make few mistakes and then maybe close the day with a net zero balance, like not making any money and just recovering from few losses, I have to tell the truth, guys, I like more sessions where I recover from few losses and then I understand more. Remember, you learn when you struggle in life and in trading. You learn when you make mistake. You learn when you are sad. You learn when you fail. You don't learn when everything is gonna be alright, when everything is gonna, just for the best way, okay? Making tons of profit. You're not gonna learn nothing. There's nothing you're gonna learn on a sessions that went very great. It's just euphoria, it's just happiness for the profit that has been made. Nothing truth has been learned. So it's really important that you understand that wealth, it's built by surviving, not by just winning. Wealth is what happens when you stop trying to get rich fast. And that's the truth, guys. Compounding requires survival. Compounding is not just making money, reinvesting money, and No, compounding is the strategy of survival, the strategy of the diversification, making money and being able, okay, to have a mind to understand where to put the money once you make this money. Avoiding zero in return sequence and patience as a competitive advantage. Patience, guys. Patience. One of the most important things in the market is patience. Know when to stop. Know when to don't take a position. Know when to catch yourself from the market, okay? So wealth is built by surviving, not by winning big. And the core principle is survival is better than performance. Okay, longevity beat the short-term gain. You can make money Monday, Tuesday, okay, Wednesday, Tuesday, and Friday, lose it all. Lose more money than what you made. So short-term gain, they don't define if you are a good trader or not. Short-term gains are just how do you say in English? It's just a euphoria phase that is feeding our ego. And we're thinking about we are a very good trader, but thinking in long-term, guys, short-term is nothing compared to long-term. So longevity beat the short-term gains. Consistency compounds over time. And that's one interesting thing, because now we are going to focus on amateur trader and professional trader and speculators and retail that I am putting in the same way that amateurs trader. So amateurs trader and speculators and retail, I will say, is the same things, and we're gonna cover these two topics. And the professional trader and professional trader focus, of course, is the same thing. So market psychology of these two kinds. We have many things to cover. I try to be, I will be as fast as I can. Let's try to be as fast as I can, guys. So market psychology, amateur trader focus. What does it focus on? 90% focus on potential gain, chasing high returns, underestimating risk. That's it, okay? React to price movement, chase movement and trend, need to be right on direction, emotionally driven decision. That's scary, but that's the truth, guys. 98% of the people that work in this market are principiant, are newbie, are people that have no clue of what they are doing. And they do what? Emotionally driven decision, fixed position signing regardless condition. It's everything confusing sometimes for these people. Underestimating risk, chasing high return, and focus just on potential gain. What does professional trader focus on? How much they can lose. That's the point, guys. I can lose this. My trading plan show me I can lose this. So I size myself in the market from what I can lose. Okay, not based on my emotion, not based on my subjective opinion of the market. You have to be objective in the market, guys, not subjective. The market like objective thing, not subjective, as I told you before. Okay, the market doesn't care about your opinion. and your psychology opinion on what is going to happen. Objective things, data, clusters, analysis, trading plan, everything. Okay, so risk management concept, of course, this we're gonna talk later. Just making sure I am being understanding about professional trader react to market condition, not to price movement, guys. Most important thing, speculators and retail trading, price movements. They care about the price. The professional trader care about the market conditions. Okay. Professional trader decides is based and adjust on volatility, and they focused on risk adjusted return, emotional detached decision making, and at that time horizon to market cost. And that's it. Retail trade price, professional trade conditions. Okay, professionals seek to be paid for risk, not just to be right. Okay, that's very important, guys. Critical difference between this kind of operator, same market, different mindset. Investor versus speculators. Investors, I'm not talking about investors, sorry, I wrote it bad, but like professional trader versus just speculators and people that want to do money very quick. And I will say these kind of people are like less developed skills in the market. Just enter the market because they are attracted to big gains in such a short time. So critical difference between these two operators in the market. Position sizing approach. Okay, retail is fixed amount and professional is volatility adjust. Time horizons management, mismatch expectation for the retail. Professional is flexible and contextual. I don't mind changing opinion in the market. I don't mind changing direction. I don't mind change my way to see the market for the day. Okay, psychological framework. Retail short-term trading with long-term emotion. And then the professional is aligned time horizon and emotional response. That's the most important thing. Again, retail trade prices, retail trade emotions, retail trade from what they see. Professional trade the real condition of the market. Professional trade data, professional trade market insights. And what is the market insight? Edge. So the core idea of the edge topic that I'm going to cover now, edge without execution rules is completely useless. Okay? Real strategy components, market selection, know when not to trade. I missed a box here, but it's okay. Volatility filter, risk models. We covered this topic in the last masterclass. Exit logics. One of the most important things in the market, know when to stop and when not to act and when not to expose yourself to the market. But one of the most important things as well is the exit logic. Know when to exit. Know when to leave the market. Goodbye market. Has been a pleasure. Perfect. Today the movement is already finished. I'm gonna be away, taking my profit, and goodbye to you. I see you tomorrow. That's one of the things that most traders don't do. They don't let the market. They stay in the market because of their perception, because of their opinion on many movements that can happen later. Statistical expectation. And that's really important thing. A good trade is not a good capital decision. A bad trade with a correct size can still be a good decision. And decision by decision on capital, not trade by trade. So if your strategy works in all markets, it's working none. Because in this little topic that I'm covering, I'm not just talking about day trading and speculation very, very short term, but I'm talking about wealth and building wealth. And years after years, money being made after money being made, compounding after compounding, you are doing something with this money, guys, and you have to be ready to prepare a really good structure of wealth preservation. Because people who do day trading, guys, are not just making money in day trading and then just spending money on sheet. You're gonna have to diversificate your money. Okay, diversification, that's the most important thing. And if your strategy works in all market, it's working none. So what my advice? My advice is, guys, be ready to have different types of strategy. Your strategy cannot be working in stock market, commodities market, forex market, and crypto market. You have to have different strategy for different kind of market. Okay, tonight, as you are seeing, of course, now we are going to the second and the last part of the masterclass. But as you've seen tonight, we are covering many things that is not just focused on speculation, day trading, making money fast, and goodbye. These kind of things we are going to focus on another masterclass, where we are going to focus on volumetric analysis, technical analysis, and real focus on which data give you more edge on the market. My professional trading strategy built on volumetric analysis and order flow. But tonight we are covering many topics: trading concept, volatility, building wealth, understanding the most important trading principles. Wealth is built by surviving. Again, surviving, guys. Try not to lose money in this market. This is the first thing that you have to do when you wake up. Try not to lose money. Not just go in the market, open the charts and try to make some money. Try not to lose money. Try to stay aware. Try to stay awake. Okay, awake, sorry. Try to stay up. Try to not lose as much money as you can, okay? We are talking about speculators, professional trader, the key insights, of course, critical differences, edge is not a strategy, build well, principle, and then now we are talking about volatility defines how capital should be used, as we were showing before. Impact of volatility. Volatility, of course, can be really bad things, as we were talking lately. Accelerated drawdowns, of course, if you don't have a stop loss. I don't know why you should be moving in the market without a stop loss, but the impact of volatility, first of all, of course, is accelerated drawdown, extended recovery times, and altered asset correlationship. So when we think about volatility in the exposure model, okay, high conviction, this is very important, guys. Okay, these three high convictions, this is an unequal sign. So high conviction doesn't mean anything about high allocation. If I am highly convicted that the market is gonna drop, this doesn't mean I have to double my risk in the market and double my exposure in the market just because I have a conviction that the market is gonna drop. No. That's not how professional trader works. That's not how a trading strategy should work. I will not just double the risk that I am in the market because I am convicted. Position side based on volatility. That's how we should do. Based on volatility, I adjust my position, but not about conviction. Not because I'm just convicted of what kind of other movement the market is gonna do today. I will higher my allocation. I will put my allocation higher. Okay, and high volatility should be aware yourself of entering in a capital defense mode. High volatility, many news coming out from the market, many macroeconomic news coming out from everywhere. Perfect. Guys, enter in a beast mode of protecting your capital. Not trying to make money from big movement in the market. Try to not lose this money, please. Okay, so high volatility, it's equal to capital defense mode. And a really interesting thing, non-exposure as an active strategy. Okay, so when you see a lot of volatility, try to think how much money you are saving if you are staying passive, like doing nothing. Try to think about this. When you see a lot of volatility, and if you are not ready to embrace it, and if you are not ready to lose money, because you have to be ready to lose a lot of money in this market, of course, as you know. But Non-exposure as a strategy, as an active strategy. That's funny, no? Not exposing, not taking any position as a strategy. It's a strategy, don't do nothing. Yes, trading, for me, trading is composed by 100% formula. 80% is waiting, 20% is acting. Guys, Pareto law, they call 80% of waiting, 20% of acting. Okay? 80% of waiting, 20% of acting. That's the thing, guys. The most time in the market you are gonna pass waiting for the perfect entry, waiting for the perfect expositions. Even if you are day trading or even if you are building a portfolio, you have to wait for the right time. The right time maybe is never, but you have to try. But at least when you want to try, wait for the right time. Okay? Protection through selective participation. And going to the final remarks, and then of course we are going to cover a few other things. This was the last masterclass where we were talking about trading strategy, technical analysis, macroeconomic analysis, cyclical analysis, sentiment and position analysis, risk and volatility analysis, of course. We were talking about volatility today. The risk and volatility analysis, that is 5% of my, 10% of course, of my strategy. 20% is technical, 40% is order flow, 10% is volatility based on market sessions, 5% in macro, 5% sentiment, and 20% position and capital flow. But last time was really interesting masterclass because we were showing all of our trading strategy, volumetric risk and volatility analysis, order flow analysis, and we covered everything. Okay, risk is controlled before enter the trade. Volatility define how much you can risk. That's what we were talking about for all the masterclass of today. Volatility defines how much you can risk based on volatility and not by opinions, but based on data and based on reliability. I will decide how much is gonna be my risk for today. That's it, guys. End of the conversation. Okay. And we were talking many things: strategy development, trading, psychology, low simplicity, journaling, expectancy and statistical edge, rule-based execution. Then we start cover the multi-factor trading strategies. Volatility changes everything. Okay, so setup behave differently in different volatility environment. That's why you should spend many time in the market to make visual contact with the market and remember the structure. It's a question of memory, guys, as well. It's not just backtesting and that's it. No, the backtesting gonna create in your memory a logical path to understand why the market is moving in a certain way. Trading is completely mind-based, guys. If your mind doesn't work well, probably your result gonna reflect. If your mind is fucked, sorry for being rude, but that's it. If your mind doesn't work properly, if your brain doesn't work properly, probably trading is not the best sector that you can follow. Your mind has to be working very good. I'm not saying mine is working pretty good, but based on what I achieve, and for me, the results that I achieved in the past are pretty good. Okay, so that's an important thing as well. The results that you achieve in your life has to be good for you, not for others. Fuck the other people. I don't mind what other people do. I don't mind if people are making millions and millions. I don't mind if people are doing good. I don't mind if people are doing bad in life. I don't mind. Everybody has their own path. Everybody has their own career, and nobody should be judging each other. Nobody should be putting opinion on other people's paths. So, coming to an end, how wealth actually compounds in volatile market. Okay, the core question is, what does long-term wealth accumulation really look like? Okay, small drawdowns on any trading strategy. If you have high drawdowns, you are having this a fragile wealth path. Because if you have high drawdowns, maybe you are having high drawdowns on a little capital right now, but when you're gonna have very huge capital in the hand managing, talking about money, cash flow, of course, then you cannot make high drawdown, guys. It's very important that you keep on a survival mode, really low drawdowns, fast recoveries, because drawdown of 20%, you're gonna have a 40% back. Okay, if you lose 20% of your money, you're gonna get back 40%, not just 20. It would be very good if you lose 20% and you have to make just 20% to get it back the money. No, you have to make double. Okay, I wrote it there. A minus 50% loss require 100% just to recover. So wealth compounds by minimizing damage, not maximize return. Guys, this is amazing truth. Wealth compounds by minimizing the damage, not by maximizing the returns. Okay, so what does long-term wealth accumulation really look like? Small drawdowns, fast recoveries, and long participation times. So a wealth durability contrast, of course, is a fragile wealth path, high returns, and deep drawdowns. That's very bad. That's very fragile. That's very ready for the worst. Like high returns and deep drawdown, it's not equal. Sometimes the high return cannot cover the so high drawdowns, because you can have amazing returns. Yeah, 300% return, perfect. Then come a deep drawdown, 70%, 60%, and you have to start coming back and make 150% to come back from a minus 75 on a trading account. So it's very important that you understand, you want to follow a fragile wealth path, doing crazy deep drawdowns and being very fragile, and maybe sometimes do some high return, but just to come back at break even. Or you want to do a durable wealth path, generating moderate returns, controlled risk, not so deep drawdown, and a good way to be in the market for a long time. I want a durable path, and I would recommend everybody to choose a durable wealth path. Okay, don't over risk money, guys. Don't over risk what you cannot lose. Don't over risk with taking too big positions in the market. Okay, so wealth compounds by minimize damage, not maximize return. Again, I come back to this important quote. Okay, so for tonight, the part of the mental maps is ended. I think was pretty clear, everything that I've showed you, pretty clear, good language. I think what I've wrote was completely understandable, very easy to understand, very easy to comprehend. We talk about many things. This is our second masterclass. We are gonna have another 4-5 masterclass just in the month of January. In the next masterclass, we're gonna cover risk management and how to build a really good trading plan. So we are starting to enter live, guys. Okay, these first two masterclass are an overview of trading concept, trading logics, volatility logics, volatility concepts, how our strategy is built. From the next masterclass, we're gonna go deep dive and construct and build our own trading strategy. We are bringing a lot of value. I hope you are perceiving this. I hope you are feeling the quality that are coming out from this masterclass, and masterclass after masterclass, the quality gonna increase. So I hope you guys enjoy this another appointment that we had tonight. I hope everything was clear, everything was smooth. I wish everybody a wonderful evening. Of course, I would like to read some question if there is some. Let's go. If you follow your plan with discipline, I'm very much excited. I'm very happy. Sorry guys, I changed studio a few days ago. I have not my proper setup been. What happens if my mind get distracted? That's a good question. What happens if your mind get distracted? You lose money, and this is the only job in the entire world, guys, where you enter your daily routine being ready to lose money. I never see another job where you have to be ready to lose money and not earning money. So what happens if my mind get distracted? Somebody asked in the chat. Perfect, you're gonna lose money. It's the only job that you need to be 100% focused, or you're gonna lose. Okay, a great session indeed. Perfect. I'm very happy, guys, that you enjoyed. Many questions, many things I've seen. So I would love, of course, to honestly 5 and 10x leverage is enough. Don't really need more than that. I agree with you. I do 25-30% leverage. I think till 30% of leverage is a good number. Beside that and after these numbers is pretty high. Okay, we are doing this live, of course, to have a record of the appointment that we are doing, so everything's gonna be saved, and everybody who cannot be in live with us tonight can participate and look at this in another instance. Okay, so guys, I'm very happy that you enjoyed the masterclass tonight. I hope everybody a wonderful evening. We're gonna see next 15th of January. If I'm not wrong, is Tuesday of the next week. So we're gonna see us in 6 days. Be ready for a very good masterclass, and hope you guys a wonderful evening, wonderful afternoon, evening, wherever you are in the world, and wish you a profitable trading sessions for the next week. Market gonna close, most part of the market gonna close for Saturday and Sunday, but on Monday we are back. Okay, take care, guys. Thank you so much for your attention, and your time is very precious. Goodbye to everybody, good evening, and see you next week. Bye guys, thank you. Precious, goodbye to everybody, good evening, and see you next week. Bye guys, thank you.